Good morning, everyone. I think the stock market sell-off from last week is over, and that the lows were in on Friday, and that the bottom was Friday. Fed official Austin Goolsbee was speaking on CNBC to Steve Leisman on Friday, and he was saying that the Federal Reserve is likely to cut rates substantially more into next year. That was kind of contrary to what the Federal Reserve and Jerome Powell said in his speech on Wednesday. He was saying that, we really don't know. It's uncertain the path. It could be less than two cuts. It could be more, at least based on the dot plot. But Austin Goolsbee being that optimistic that there could be a considerable amount of rate cuts next year, combined with better than expected inflation data from the PCE report, lifted markets on Friday. And I think the bottom was in from those remarks. And I think a Santa Claus rally is ahead. The Santa Claus rally technically starts tomorrow, and it should last till January 3rd. It's a historic period of strong stock market returns that week, and we saw a weak December so far. So, and the market's a little bit oversold as well. So I'm expecting a pretty strong Santa Claus rally, especially after Austin Goolsbee's comments on Friday. Obviously, we have to see. Additionally, we had the government shutdown was averted, and a spending bill was agreed upon, or at least it was kind of kicked the can down the road into March. But either way, although a debt ceiling limit wasn't suspended, at least the bill went from like 1,500 pages to 120. So in terms of less spending, that was a huge win. And then the other thing I want to talk about is that Donald Trump just announced last night on Truth Social that he's making even more appointments in the Crypto Advisory Council, Science and Technology policy positions, and AI, working with David Sachs. This is good news because we're really having technologists in the White House trying to be at the forefront of digital assets, innovation, and artificial intelligence. We need to be at the forefront of these technologies in order to not fall behind. We don't want this innovation to go overseas. We want to work with these companies to ensure clear, fair, and reasonable regulations, not regulations by litigation or enforcement. We want to work with these companies to make good common sense litigation to promote innovation on shore. And with these appointments by President Trump, a lot of them were from Andreessen Horowitz. This should be good news for American strength, and at least in terms of technology. And technological strength usually transforms into economic and military strength. So obviously we have some uncertainty next year with immigration, tariffs, and tax cut policy. But I think the tailwinds of technology and artificial intelligence from the deregulation should outweigh some of those risks. Obviously, the biggest risk if interest rates and bond yields stay higher for longer, and the biggest risk of them all is if the Federal Reserve has to hike rates again next year, then I think yields would really spike and hit 6%. But I don't think that's really the base case right now. And it's possible, but I don't think that's the base case. But even if that were to happen, I still think the tailwinds of technology, AI, and the productivity gains from that should outweigh some of those growth scares and uncertainty about Trump's policies. Obviously, we have to see, but I think we're almost in year three of another bull market a bull market that has another 3 years or so left to go. Obviously, we could have maybe multiple 10% dips next year from the volatility of some of the uncertainty. But I still think next year will be a decent year. Maybe it'll be a single-digit return year. I don't think it'll be a double-digit return year like the past 2 years, just because I think to have that rate of growth will be kind of unsustainable. But I expect maybe next year's stock market returns to slow down a little bit, but I still expect this bull market should continue at least into 2029. Probably, in my opinion. Obviously, we have to stay tuned, but the AI gains we're seeing and the productivity gains from that really remind me of the Roaring '20s and the 1990s internet boom.